After OPEC Plus announced its decision to further increase oil output by a little more than 600,000 barrels a day, oil prices fell below $110 per barrel. However, the risk of energy shortages remains elevated. First of all, this can be attributed to the Western countries' attempts to set a price cap on Russian oil and gas. This makes the downside potential of oil prices extremely limited. The decision made by OPEC and its allies can lower prices only for a while, as long as the West is exploring ways to limit Russian energy exports. The oil market will try to resume growth again and again. A shift in market sentiment around the level of $120 per barrel led to a steep decline in the value of the asset. In a short period of time, the quote fell by almost 10%. As a result, it trimmed all gains posted during its recent upward cycle. Now, sellers are expected to face last week's low at 104.35. If the quote breaks below it, the way to the psychological level of 100 will open. Ongoing energy poverty risks are forcing countries and large investors to create the additional reserves. This, in turn, is putting pressure on gold. Thus, the metal has fallen below $1,800 per troy ounce. Major investors continue to flee from safe haven instruments, shifting their focus to energy assets, including oil and gas. Such a strong decline in the value of gold indicates that oil prices are highly likely to resume their bullish run. Locally, gold futures are expected to see a short-term rebound. The quotes may again rise slightly above $1,800 per troy ounce for a while, but then resume a downtrend and fix below this mark. If the price stays firm below 1,800, the volume of short positions will increase. In this case, the yellow metal will slide to the level of 1,770. Yesterday, the US dollar rose above the mark of 54 rubles for the first time since the end of last week. However, its rebound was short-lived. Shortly after its rally, the quote returned to the area of 52 and 53 rubles per dollar. Apparently, the outcome of the Congress of the Russian Union of Industrialists and Entrepreneurs convinced the market participants that the government and the Bank of Russia intended to take tough measures to weaken the national currency. Amid these expectations, the ruble lost value. Now much depends on further steps the Bank of Russia will take. The next board meeting is scheduled for July 22. However, many believe that next week the regulator will hold an extraordinary meeting and probably cut the key rate again. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.